To understand the setups on March 13th, which was Thursday, we have to go over the pre-market plan. I post these every single day in the Discord of the setups that I'm watching and levels that I'm looking out for. The main thing that I was really observing for, and scenario number three was the scenario that came into effect, was the market was relatively balancing out, and we had a support level at 55.53. So my idea, my thesis was the past three sessions, the market hits it, bounces, sells off, hits it, bounces, sells off, hits it, and then bounces again. And even now in the overnight session, we're doing the same thing. So my thesis was if the level of support breaks to the downside, yet the market holds it, it could be a good indication of a failed breakdown of balance. And this typically is a very bullish indication. So now the market opens up, and pretty much directly after the open, we see a significant sell off to the downside. And I'm going to stop this around 9.56 because after this significant drop into this level of support that I just mentioned, the market keeps bouncing off of. There's some significant volume activity that we have to be aware of. So pulling up the book map, I have a full order flow series on my YouTube. If any of this order flow terminology confuses you, I would really recommend watching the order flow series on my channel. But as the market was aggressively selling off, zooming out, we could see a lot of red bubbles, which just indicates a lot of selling pressure or trades hitting the bid as the market's moving down. But zooming in, there was some significant activity at 55.70 that I want to highlight here. And this is what I call a zero print, or basically no volume being transacted on one side of the market. As we can see here, the market aggressively moved down, large selling volume. And now that I look at it, the market rejected this pretty well two different times. But what's significant here is at 55.71 and 55.70.75, there is zero volume which traded on the offer. I've made so many recap videos. I've taken so many trades off of this that these levels are magnetic forces where the market likes to gravitate towards. So pulling up a normal candlestick chart, I'm just going to mark the 55.71 level and I'm going to put this as a blue line. These levels the market likes to trade at because at the formation of it, the market did not give a fair opportunity to trade at that price. So as the market is selling off, I developed this thesis that I am watching for a break under the pre-market low at 55.59, which I've now highlighted as this yellow line. If this yellow line 55.59 can break and hold above that 55.53 level of support, again, that I mentioned in the pre-market plan. If we can break pre-market low, yet hold that level of support at the 53s, I am interested in playing long, targeting that 55.70 level that I just mentioned. These levels are like magnetic forces. The market likes filling them and likes trading at them. So my thesis most of the time is looking to get long or short targeting that level. In this example, the market was selling off, breaking a pre-market low. And then eventually we hit that 55.71 level and it worked out perfectly. Now in real time, I did not find confirmation to take the market long. It happened relatively fast. I wasn't comfortable with what I was seeing down here at the lows. And in hindsight, it makes sense right now that I should have followed my plan and longed it. But in real time, I honestly just missed this setup, although it worked out perfectly. It sucks. It's not a big deal if we just sit back and focus on another opportunity. So that was a good indication that buyers were present at the low. And again, these levels are so important to watch and mark. Now the market begins to rally, and on this rally, something else significant happens that indicates buyers are present here. When I show you the trades that I took yesterday, because it was a really good long position, which I'm going to recap after this one, this confirmation right here is very similar. It's what I call market structure demand. The market sells off, consolidates, and then rallies back up. And then I look to long a pullback into the area where it consolidated. And this was transacted right here at 55.65. Which is where this basing or consolidation period came. So my plan here at 10:05 was to watch for a pullback into 55.65. If it could hold, I would then look to play longs. Now, 3 minutes after this forms, the market pulls back into 55.65. If I were to zoom in right here, it pulls back into 55.65 perfectly on this red little sell-off down here. And what it looks like off the tape is here's this market structure. Zooming in, the market pulls back into this 55, 65 level pretty much perfectly, and then rallies up, and we get the continuation up. Now, at this point, it happened again so fast. On this pullback, in hindsight, was a great opportunity, but honestly, I did not catch this long, and it was pretty frustrating that two of my bullish plans here have just worked out. Buyers are present in the market, and I was not able to capitalize on it. Now, the third thing is really what validated this and sealed the deal for me to capitalize on this long. So after just recapping this so far, after the buying that we saw at the lows under the pre-market low, after the buying that we saw at the 65s, we get the same exact thing that really occurs here at 55.80. You see this period after the market moves up, we consolidate, and then we get a rally to the upside even more. This consolidation to me is something that just piques my interest. It just indicates that the market is accepting higher prices. Now, after this trade works out, I'll just show you all basically what I was saying was the first move that I missed, it worked out perfectly. It was too slow to click the buy button. Same thing with the second move. And then the third one, which is this period of consolidation, eventually does work out. Because I missed those other two trades, yes, in when I was experiencing that, it sucked. But because I spotted those buyers on the two other times, it just made this third trade even sweeter to me. That indicated that really buyers were very present on the intraday move. So it's all about perspective. Yes, I missed the first two moves, but since I did miss them, it kind of validated that the buying that I'm seeing at higher prices is very strong. So as here, the market pulls back into this 55.80 level. It pulls back into it, and I'm comfortable getting long. This is also a low volume node. If any of you have watched one of my most recent videos, it's a perfect low volume node. And I get it long at the 80s, stop loss under the 77s, targeting the 90s, and then the 5600s. And this was a 5-to-1 realized risk to reward ratio and a $16,000 profit, just simply longing the pullback. So here's the consolidation. I just removed the 71s. Here's that perfect pullback into these 80s where the market consolidated. That was the entry long. And then taking profits into strength where my last exit was above the 5600s high a day. And as it broke out above this, I was able to take profits, which was a perfect high a day exit. And this is why it's so important to put targets at levels where the market can reverse. Every single target that I place is where it proves my analysis correct and where the market can possibly reverse. And this was a perfect exit there at the 5601s because that was the high of day. And this was just such a beautiful trade capitalizing on the buyers that I saw 2-3 times on this morning dip. Okay, so now March 12th comes. This is Wednesday, and this was a rough start to the day. And a lot of emotional mistakes, a lot of buying just because I thought the market was going to go up. And the first trade that I took was from CPI data. I took a pre-market trade, which I rarely do, and this was a break-even. Now, the second trade was a $4,200 loss, and this was a stop out within 1 minute. I essentially got long as the market was dipping down, and immediately this red candle stopped me out for a loss, and this was a $4,200 loss. Similarly, the next trade that I took, $3,500 loss. This was a 2-minute long trade again. I basically longed the market on the way up, and then 2 minutes later it stops me out for a loss. Now I start the day down a little under $8,000. I'm basically one break even, 2 losses, and I had to walk away. Now I'm just gonna go through my commentary in the Discord. Again, like every trade that I take is in here, win or loss. Everybody could see my emotions. Everybody could see things that I'm doing right, things that I'm doing wrong, things that I, shouldn't be doing, and I just try to highlight my trading, the good and the bad. That way everybody could see it. Basically, highlighting my confirmations, the market was selling off. I saw a bunch of absorption, saw even more absorption, didn't work out on me, and then I start the day finding it difficult to short the S&P while Tesla and Nvidia were up 9% and 7%. Now, I walk away, basically did something completely unrelated to the market because I just felt the itch to execute, and I felt the itch to make my money back, and I felt the itch to kind of prove myself correct. The market, like I've been mentioning, the past couple of weeks has been severely downtrending, and the majority of my wins have been off of longs. So I sat here trying to long this sell-off down, which again, I'm not going to say was the wrong decision, but one of my rules is to not be a first buyer. When I notice every single rally to the upside fails, I don't like taking the market long on the first sign of buying. I'd rather get in when the buyers show themselves, and then I could get in on the retest. So that was kind of my mistake that I was frustrated with. And I was also frustrated that I had a bearish plan, which I'll pull up the pre-market plan here. If this yellow line breaks, then I'm going to be looking for it to act as resistance for a downside sell-off into the 55, 53 level that, again, was on the Thursday trade. But I kind of went against it because I wanted the market to bounce and I wanted to see it move up because I saw Nvidia and Tesla up significantly and I didn't want to go against that and short that. But without ranting too much, I walked away. I was frustrated and I felt like trying to catch this move and I wasn't comfortable with it. And I did something completely unrelated to the market. Now, a few minutes later, around 11:20 Eastern time, the market dipped down. And again, what I said about not being the first buyer here, similar to the confirmation that I saw on Thursday, we see the same thing occur here on the S&P 500. So on the previous sell-offs, we see the rally here fail. We see the rally here fail. We see even this rally fail. Now down here, this market is trying to rally to the upside. Now on this rally, it's met with a higher high as we get a breakout, which is something that we have not seen on a previous rally where the market puts in a higher high. If we were to look at all the previous levels, this is lower, this is lower, this is lower, right? Every high is lower than the previous high. We're putting in lower lows and lower highs. Now we're seeing the rally down here with a strong continuation to the upside and now putting in a higher high. Now, similarly to what I was just mentioning on the Thursday trade with the confirmation, the market essentially does the same exact thing. Here, the market consolidated prior to a rally up and after a rally up, which is that second rectangle that I just put right there. So now we see a period of basing that I am looking to long a pullback in. The market sells off aggressively into this level, also coincided with a low volume node, which again, something that I've recently been taken, and the market rallies up. And I find enough comfortable confirmation, which I'm now going to mark this basing period right here as a market structure level of demand. The market pulls back into this level. And after the first failed 3 attempts of a long, I find good enough confirmation to take the market long as it's selling off down here at the 64s, going for a 26-point target and 5 points worth of risk. This trade was a $20,000 profit. I got 26 points. And for me, 26 points is a decent amount to take from the market. I don't really have further out targets, but because of the buying activity, it was about a 5-to-1 risk to reward ratio, $4,000 worth of risk to make this profit. And looking at the chart, this looks identical to that confirmation, right? Here's the market structure demand, rallies up, pulls back into this perfectly, and I find confirmation to take it long down there, targeting the next level of resistance. The market rallies, and I get all out of the position there. And that confirmation looks identical to the confirmation that I missed on Thursday the 13th, that the buyers held that market structure demand perfectly. So it's just about spotting patterns that repeat themselves. It's just about spotting things that, and here's the continuation up. And I was targeting the 90s. So here's my entry. And the reason why I was targeting the 90s was just simply this little swing high right here. So long down here at that market structure demand, targeting that swing high. That was the next level of resistance that I could have came up with. And yeah, in hindsight, if I kept holding, it would have been a massive winner. It was a V-shaped recovery, but my job is just to locate my setups. I know the patterns that I'm looking for. Like all my setups are repeatable. All these recaps are repeatable because the setups that I'm taking are so repeatable that I'm just looking for them every day. And when I see them and I know that the risk makes sense, that's when I click the buy or sell button. And it's just spotting these patterns, knowing your setups and taking them and having the confidence in them. And as I'm recording this video on Thursday, this is how basically my month is looking. My average win to loss is a little lower just because of a lot of trades going past my stop loss in this volatility, which is something that I can, make a lesson on. But pretty well start to the month. It's not over yet. It could go downhill. It could go uphill. It could keep going up. So let's see what happens. But if you enjoy these recaps, let me know in the comments. Let me know by liking this video. If you're new, subscribe to my channel. And also follow me on my Instagram. The link for this will be in the description below. But I'm ending it. Peace out.